In this video, I show you a very good trend following systems using 3 moving averages, which you can use on any market and on any time frame. So to set this up, we go to indicator and then we type in EMA and then you click on it 3 times. 1, 2, 3. Now we have 3 moving averages here. We need to adjust the settings. So for that, we go to the first one. We go to the inputs and we type in length 100. The rest can stay the way it is. You can also change the styling if you want, but that's a little bit up to you, of course. For the second, we open the settings again. Under input, we change it to 50, change the color. And now for the third one, we go to length and then we type in 21. So now we have the EMA 100, EMA 50 and EMA 21 on our charts. So this is a long-term, a medium-term and a rather short-term moving average. And moving average help us very nicely with identifying trends. So what we want to look for is that the moving averages are separated. So you want to see the green one, which is the 21 period, above the 50 and above the 100. And this order indicates a bullish trend when the short term is above the medium term and above the long term. All of the 3 moving averages are pointing up, confirming the uptrend. Here, when we look a little bit to the left, we can see that this is reversed. We have the 21 at the bottom, then the medium 51 in the middle, and the higher 100 EMA at the top. So this is a bearish setup. Short term below the medium term, below the long term moving average. So in this area, you're looking for shorts. In this area, you're looking for longs. But how do you actually find the setup and what is the entry? The entry is quite simple. What you want to look for is the price pulling back into the medium moving average, so into the 50 period moving average, and then rejecting it. And this is a very simple pullback approach. So you have your trending phase first, the pullback here, and then on the retest, that's where you then look for continuation opportunities to get the next trending leg. One thing that is really important about the trend structure that you're looking for is that before you have the retest with a pullback, you have a good trending period. So here we have a very good bullish market sequence where the price is trading above all of the 3 moving averages and the moving averages are crossed into the right bullish direction. And you want to make sure that you have this good bullish phase before the pullback. That's really, really important. Because essentially what we're doing is we're trading this trend rhythm continuation. Bullish impulsive phase, bearish pullback, and then we want to trade the next bullish impulsive wave. So this is what we're going after. It's totally okay to miss the first trending wave because the first trending wave is very hard to spot and we don't need to capitalize on. We just want to get into what is the most safe part of a trend, and that is typically after the first correction phase. So let's take a look at another scenario. And here when we look at this chart, we do have retests on the long-term moving average. So here is the 100 EMA being tested. And here the market goes beyond the 50, beyond the red line. So those are not valid setups. We only want to make sure that the price is just hitting the 50 EMA, but not penetrating it, not going through it. Also, as we can see here, this is the retest that we're looking for. Prior to that, we have a good trending period, right? So here the market was moving above the 3 moving averages very nicely. All of the moving averages were pointing up and crossed into the right direction. You can also say that here previously there was a retest of the right 50 EMA, which is correct. So that would have been a valid retest, but the price never shot up. You can see prior to this retest, this was the highest point. Then we have the retest, but the price never really got away and never pulled away from the moving averages again. So although this looks like a retest, you want to make sure that you see bullishness at the moving average. This is what you're looking for, right? You have the trending period, you have your pullback, and then you have a very, very strong breakaway candle from the moving averages. So this here is the perfect signal. And at that point, that's where you look for an entry opportunity. And then you can see we just follow the price on the way up above the moving averages. We have retest of the moving average here of the 21 period moving average. So if you're not already out of your trade, you can think about now maybe lightening your position as the market is pushing into the moving average, but you can also hold for a longer term push because the price has still not reached the 50 EMA. Here again, the price dips below the 20, but immediately pulls away higher. Not a very strong bearish signal here. So here it's different, right? And now the market is pushing into the 50. So your first entry, this is your latest exit point. If you're not out by now, when the market is pushing so deep beyond the EMA 21 and reaching the 50 EMA, that's your exit signal. At that point, when the market is reaching it, you don't know if the market is going to pull back once again. So it's much better to just take your profits from your first trade and not try to gamble it. You can still wait to see if you get a good retest entry here and a good pullback entry, which in this case it seems like we do, but it's better to just secure your profits if the market is dipping that deep below the 20 EMA. And you can see after this retest, the market is never really taking off. It's kind of struggling here and putting in a triple top. So although this might have looked like another entry opportunity, this didn't go very far. Another thing to consider, this retest happening here happens after a very, very long trending period, which is not ideal. This entry, the first one that we looked here, is coming right after this breakout, right? We have this inverse head and shoulder. The market is breaking out and just starting the new trend, whereas here, you're potentially getting in after a very, very long trending sequence already. So it's important to also look left, how far has the price trended and is the market in a mature trending phase or is the trend just getting started? If you like this way of trading, make sure to check out my Ultimate Trading Program. It's a trading course where I summarized my 16 years of trading experience into a few hours worth of video content. But there's so much more than just videos. You receive support from me 7 days a week. Every day, when you have a question, you can reach out, ask me questions, and I will respond to you 7 days a week. The trading program here consists of a trading course. There are over 80 new videos that I've never shared anywhere else before. The mentoring part is included. We have regular live webinars, and you will also be part of a lively community of traders from all around the world. I'm not using other teachers, I'm not using other mentors. You will be able to interact with me always directly. You learn my day trading strategies, my swing trading strategies, and you can apply to all the different time frames. Whether you are a completely new trader or you already have some experience, the course will help you make the step to the next level. The course in this program helps to build up your trading knowledge step by step. Here's a rough outline of the course, and as I said, there are over 80 brand new videos, so there's a lot for you to learn, and you will learn my actual trading strategies. I have dozens and dozens of trade examples for you. I show you how to backtest it, I give you my exact price action entry rules, and I'll show you exactly how to trade and how to prepare your charts. We also currently have a discount running, so make sure to check the link in the video description, and now let's get back to the video. This strategy can be used in many different ways. You can really make your own strategy out of it by changing your rules and changing the settings a little bit. You can use higher time frames in combination as well. You can use other tools. So here what we can see is here the moving averages crossed into bullish mode. We have the 21 above the 50 above the 100. So this is the bullish mode that we're looking for. Then we have a bullish push. And the market this time is pushing all the way into the 100 and it's really nicely respecting it. So some traders may feel that you don't get good setups at the 50 level. Maybe that's not how you like to approach it, but you want to look for deeper pullbacks to get an even better entry price at the 100. Also, some markets may pull back more to the 100 compared to the 50. So if you find that you're trading a market where the 50 isn't really holding that well, you might want to consider using the 100 as your retest area. Then you're looking for a resistance area. So we have the pullback here, right? The market is touching the 100. The P and the moving averages are crossing into an unfavorable setup. So that's not great because now the medium turn 50 EMA is above the 21 EMA, which is not what we are looking for. So at that point, you're waiting a little bit. Looks like the moving averages are now crossing back, and now you can see the 21 is getting above the 50 again, but we still haven't broken the resistance area here. And now with this huge candle, the moving averages are crossed into bullish mode once again. 21 above 50 above 100. We've broken the resistance. So this is now your entry candle into the bullish opportunity here. We're coming again from a bullish phase. We have here our bearish pullback, and now we have the breakout continuation that we're looking for. So potential entry you could have found here. And now let's just fast forward and see what's going on. The market keeps trending, rejecting the 21 very, very nicely. Another retest of the 21 happening here. And now the market is fading out a little bit, and you will start with time get an idea and get a feel for how the market is trading around tops and when it's bottoming or topping out. So here we have a triple top, 1 top, 2 tops, and 3 resistance touch points, what we call a triple top. And at that point, you really want to get out because it doesn't look like the market is supporting the bullish trend anymore. But if you get in here on a breakout and then get out somewhere around here, that's a very, very decent opportunity where you can find good trend following opportunities.